Chefs. Hello, everybody. Hope everyone is well and having a brilliant middle of the week, end of the week. Where are we? I'm not even in the right time zone right now, guys. Unfortunately, I'm in a bit of a hay fever season, so if my voice sounds like my balls have just dropped, then I do apologise, guys. So let's get cracking into the market breakdown today, guys. So what I want to speak about is how we are looking with regards to the macroeconomic market, so what's going on in the world in simple terms. And then, guys, I want to give a bit of a breakdown about the price, as I usually do, and then make it into a bit of an economy lesson as well, or an economics lesson, should I say, because it's quite interesting how the world is unfolding right now as we speak, and we can see really what is going to be the next sort of 1 to 3 years of our life unfolding day by day. And there's a couple of questions I've got in my own mind about the reason in which the way things are panning out, how they are, if that's the best way to put it. But yeah, there's a couple of questions that I've got about the economy and the way in which the stock market and the SP 500, etc., are just not correlating the world that we do live in, which to me is quite worrying for the macroeconomic environments, etc., quantitative easing, all that job lot stuff. But I'm going to get into it in a moment because I want to first give a breakdown about the price and what my thoughts are for the certain key markets that I've been covering over the last couple of weeks, guys, because there's a lot been going on since the Monday breakdown, and I'm going to be honest with everyone, I have been missing doing the breakdowns as frequently, but as we know, guys, I have been focusing on the course content and the platform content as a whole. So I've had to compartmentalize my time more into doing things like that. So let's get cracking, guys. So I want to start as I do usually. I'm going to do a bit of a breakdown through Bitcoin USD today because A, I feel like it, and B, I've done BT Euro quite a bit recently also. So I'm going to move over to Bitcoin USD because my analysis is slightly different on the Bitcoin USD compared to that of Bitcoin Euro, but they are still ultimately the same in the overarching, apologies guys, meaning. So let's look at where we are. So what we can see, guys, is, just to give everyone a refresher, we can see that we've had this longer term apex that's been, the price has just been in and out of it for weeks on end, months, years on end. Last couple of years we've been trading within this, guys. We've had 1, 2, third touch just here, and then 1, 2, and the third touch just there, guys. So there's a couple of different ways in which this could play out, and I want to explain to everyone how this could play out. Now, this is completely my opinion on how this will work, but if we do break out of this apex, what I think we're going to start looking at is something along the lines of this. So we can see the price just here. It is retesting this level of resistance just here. If we do break out, the price is going to divot up here a tiny bit before moving to the upside. And this is only if we do break out of this apex. Once we break out this apex to the upside in the future, guys, it is time to buckle up and get your seatbelts on because we will be looking at the higher levels. But I'm not convinced. And the reason why I'm not convinced, guys, I'm going to go straight into this and get my deform chart to look something a bit better. The reason why is we've had, let's say, more of a higher high just here. We can see just there. But what we can see, guys, is this is complete anomaly as to what we've been seeing in the market over the last few weeks. What we've been seeing is, I'm going to make this as small as possible, but okay, I'll delete it in a minute. All we can see is that this line has been, they've been keeping rejecting this line. 1 rejection, 2 rejection, 3 rejection, 4 rejection, 5 rejection, breakout. So what we're seeing right now, guys, is we're seeing a breakout of this rejection, of this line of resistance just here. What I do think is going to happen over the next few days, because I do have a longer term wedge, if we do happen to break out, we may, there's a couple of different ways we could work out with regards to moving forward in the future out of this wedge and out of this apex as always. We could come back out, we could be faked out by the institutional guys, come up to around $10,500, guys, before confirming this ascending wedge, which, as I've mentioned in the past, guys, ascending wedges are bullish signs. So what this would look like is, it would look like price would move in and out of here, and then eventually we'll break to the downside. And the way in which you measure, and this is why, if this does play out and it does confirm this wedge, then it's not looking too good, guys. So it's quite hard to understand as an investor that is getting into the market now, which is why I would not recommend doing it, because there's different ways in which it could play out. Yes, we could break out and break out to the upside and continue and buckle up and go, but the way in which this could happen is we could come back below this line just here and then retest more consolidation around here and break down to the downside. Or guys, we could move in and out of this wedge as we've been doing, respecting the levels of support and resistance. And then from there, guys, the way in which we actually measure these targets from here. So if you're doing, let's just say, I'm gonna try find one right now as we're looking at. So let's have a look. So what we've got is we've got a bullish pennant just here. So a bullish pennant is a bullish signal. So what we can see just here is price has come into this pennant, it's come up, it's formed the pennant formation. And what we've had there is we've had a bullish pennant. That's an absolutely beautiful one. But the way in which we would go ahead and mark a target, so if this hadn't happened, if I was looking at this as a bullish pennant, which is a bullish indicator, guys, I would then go ahead and I would take from the widest point within the widest point, which is 3.71%, guys, and I would be looking at my trade as a 3.71% long. And so then what we do is, if as we broke out of this as a whole, if we broke out this bullish pennant, if I remember that 3.71, let's just measure this out, see how, once we broke out of that, how far did we go up? We went up 4%, guys. So if you would have gone and made a long trade just there, from within what the data we've got here as a bullish pennant, you would have had a successful long trade. You would have bought the market and you would have traded absolutely beautifully. You would not have been, if you'd have taken the long position just here with a nice tight risk reward just below the lowest level of support from the last week down, then you would have had, like I say, 3%, 4% trade just there, guys. And this is how you do it. This is how you understand. This is what I'm going to be teaching in the more advanced stuff, guys. This is the taster of what you can do. But again, that's when I'm speaking about a bullish pennant. That is exactly what I'm talking about, guys. It's a bullish indicator. We measure the target. We hit the trade. Boom, boom, boom. Happy days. So I lost my train of thought now where I was. So with the concept that I've just mentioned about measuring. So what I'm going to do now, guys, if we respect these lines, what we've got here, that form this ascending wedge, let's just measure from the top to the bottom of this wedge. That is a 24% move, guys, right? So if we break out and confirm this wedge just here, guys, we break out of this, we have got 24% to move, guys. 24% to the downside, which will take us in and around to the $7,800 level, which, guys, would not be pretty. This is why it's very, let's just say, tricky to play the market right now, because there's all these different things that could happen. We could break out and we could see all-time highs. Absolutely, that could happen. But I don't think it's going to happen. The reason why is because we've seen so many rejections, guys. So many lower highs forming. Lower highs, lowest highs, lower highs, all the way down. We've seen one. They call it a Bart Simpson, this one, because basically it looks like Bart's head. What's happened is the price has moved up and poof, it's come straight back down, tested this level of support just here. And we've moved down and continued up to the upside, respecting these lines once again, guys. So the fact that we're respecting this line as a whole and this wedge says to me that there's one or two things that could happen, guys. We could get fat rejected altogether. We could come here, break out of this immediately and move to the downside, or we could continue respecting this and then break down to that 24% decline, guys, which really, if people, this is why I'm talking about not investing at this stage. It's very risky because you are having to double your money, guys. You are going to have to go to $18,000. $18,000 is 2,000-ish off the all-time highs of Bitcoin, simple as. And, you know, it's a very risky thing to do. So what you can see right here, guys, and this is the strategy that I'm going to be speaking about in the platform. My target just here, this is my minor target, guys. Like you say, if we break out of this, we are going to see a 24% move down. Absolutely bombing through all these levels, guys. Absolutely bombing. So my target, conservative target, is here, around the $8,000 mark. If we break that $8,000 mark, then it is absolute water slide time, guys. And I think we break the 7,300-ish mark, then we are looking ultimately to my long-term target just here, the 5,000 to 6,000, guys, where you can see we've had all these weeks ago, we've had these lines drawn in, and I've kept them in just so we can sort of revisit what is happening in the market. And I've got my various different buy levels set out. They're going to be different to what you're having, but I'm going for a different costing averaging strategy to what I will be teaching. But I will inevitably teach people this in the future, guys. So my strategy as a whole is have a certain amount of capital and just spread it over a certain amount of time. So you accumulate over time, you lower your average, and it's as simple as that, guys. There's better ways to do it. There's more ways to make money from it, and I will explain that absolutely in the course, guys, and in the platform. So that's my thoughts on Bitcoin. I think we are going to see over the next few days. I think we're going to see another $10,000 retest, which is what I'm actually in a long position at the moment, ready for taking profits around this level just here. More conservative actually, because we did go up to the around $10,400 mark, got rejected on this line just here, guys. Look at this, absolutely beautiful. You can see this line that I had drawn in, it has respected that, and this is where we need to start understanding the way the market works, guys. We can see boom, 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 take profits. I am looking for a 10,000 retest. We may go to 10,400, but I do not really care, guys. I'm looking for the immediate, not immediate money, but the money that is not the greed. Take the greed out of it. What is my target? My target is a retest of $10,000, which I think we really, really well could do, which is why I'm looking for that $10,000. We may fly up and retest the top of this line again to that $10,500. But again, guys, I will be looking to, if we do that, I will be looking to play out and put a short position just here. Because, again, I'm not going to get greedy. I'm not too bothered about it. I will take my profits at $10,000. And we may break out, but I will take my profits at $10,000. And then from there, I'll take a long position out just up here, guys. So there you have. You have got an idea of my plays over the next few days, guys. It's absolutely the way in which you can start to manipulate the market in your favor. And really, guys, the price of Bitcoin, I'm confused how it's not dropped just yet. We have tested this line so many times and been absolutely dumped off the back of it, but I think there will be an unholy dump over the next few days. Right, moving on to XRP, guys. So this is not my populated chart, so I'm going to move back to the XRP Euro, which really, guys, I think over the next few weeks we're going to see some good things from XRP. I think if we do see a dump from Bitcoin, we will break out this apex to the downside, in which case I'll be looking to accumulate more at these levels. But if we do break out to the upside of this wedge just here, then it's going to be looking good for XRP. I think we could probably see it around a 40-cent region by the end of June/July, which is quite exciting, really, to say. It's been the worst performing asset in the cryptocurrency market pretty much on a whole. We can see up here, I mean, I've not got enough data just here, but we was at $3 once upon a time, guys, and it has just absolutely flown down. So it is still one of my better plays. I absolutely love the coin. I love the work, what they're doing to bring the banks in. Not many people don't, but that is just my opinion, guys, and this is why I back this project. Some of the things I've spoken about in the past, guys. So what we can see respecting these lines, just again, what we did have is here, we've had a channel just here, what we've broke out a few times, found a bit of support, come back into the channel, come back up, now it's resistance. So this channel was acting as support. We've broke out of it, retested this line, which is absolutely beautiful, beautiful line of support just here. We're now trading within this zone just here and using this as what was previous support. And now is resistance. So what I do expect to happen over the next few days, guys, is that we are going to continue trading within here. If we do break out, we will come up and retest this just up here as a line of resistance, and then possibly move up and test the top of this apex just again. But guys, I think we will be massively, as I said in the past, determined by what Bitcoin decides to do over the next few days and the next few weeks, because it's not going to stay this still forever, isn't Bitcoin? I think it has had a good move up, good move down, but I think we are going through a consolidation phase before and move to the downside, guys. So moving on to Ether. We can see it's been really, really good. It's been really, really performing really well over the last few days and the last week or so. We can see, respecting these lines, this is where we are. We've moved up absolutely to, let's just check how much that is. So about 25% up from the recent low. Respecting these lines, I think we will come back down and retest this line around the $208 region. And then from there, we'll be looking at a long play for Ethereum, and then we'll be looking at probably around the $230 region. I think with Ethereum 2.0 coming out, which is going to be unbelievable, faster than the Lightning Network, etc. And there's a lot of good things coming for Ethereum. I think that is inevitably what has pushed up the price. But I think it's going to be one of them where it is a buy the rumor, sell the news, guys. I think once that the Ethereum 2.0 does actually come out, whereby Ethereum 2.0 is basically an upgraded version of what they're existing, but what they can do is you can then go ahead and stake your coins, which is almost like earning dividend for earning cryptocurrency. So you would stake your Ethereum, you'd have a certain amount, and they would give you a certain return in, let's say, interest per year. I think it's 10 to 18%, so it is really one of the better, higher end use, better than what you're going to get on the stock market, put it that way, guys. But this hype has pushed the price up. But I think there is going to be massive upside over the next few months for Ethereum. I think we may see the miners pull back and even break out and come down to these previous levels at 170 around, and perhaps even lower, around the 160s for the next few weeks. And then as we move closer to that Ethereum 2.0, guys, we are going to be looking at an upside target around $400, guys. So I know I'm taking a breath in the last 10 minutes, and I'm going to take a drink right now because my mouth is getting rather dry. Okay, beautiful. So where are we with regards to ZRX? It's absolutely parabolically gone up. I said we'd come. It's interesting, right? Interesting, because probably about 3 weeks ago now, actually, I mentioned it was this target just here. So I had a target to enter this long just here. Now, what I think is going to happen with regards to ZRX as a whole, I think we're going to see an immediate upside. So I think we're going to come up and retest around the 35, 36 cent region, perhaps even the 40 cent region. But I think after that, we're going to see a downturn in accordance to Bitcoin's dump, which I'll be looking for an entry around these levels down here on the 25 cent level. It's a very exciting project, is ZRX. It's very new to the market, in which case it did see a big upside, and then it did see a big downside also. But I think what we're seeing is a boom, 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 boom. It's moving in quite nice, luscious waves. So it gives me more further clarity that how we are going to move down towards this entry point, enter long, or we could go through on a gradual investment. But I think, guys, it's always a more risky one, pardon me, than what you will see in the top 20, but I think as we do move on, there is going to be some other opportunities that come out. Now, Engine, guys, Engine is a very, very exciting project, I do think, and I think we are looking, we recently come to the recent all-time highs, and it was unbelievable, really. I mean, I am actually not invested in this coin, but I will be in the next few weeks, because it's very interesting how this is going to play out. I think it will have a big, big correction, guys, along with the rest of the market. As we know, with small cap coins and the coins that are smaller, they do tend to pump quite a lot and then dump quite a lot as well with Bitcoin's price. So what we can see is, I think what we'll see is a big correction down to these levels just here. I'll be looking to accumulate all the way down, and then from there, I think the project itself is in gaming. They are working with companies like Microsoft, so it's a very exciting one. I think it's not a massive investment you would put in. I would be putting in around $500, and then from there we will see what happens. If it gets lost, then okay, it's a bad investment or whatever. It's lost the money, but I'm sure with the volume and diversification along the different various small cap coins, one of them will pay dividends. So I'm quite excited for this project as a whole, and I think it's something I wanted to run by the market and by you guys, so you guys could have a look at and make a decision looking at their website as to how you want to invest your money. Because again, it's not a financial advice, guys, it's just what I think about some exciting coins as a whole. Now, Chainlink, holy grail, I love Chainlink, it's brilliant. So no, I wouldn't invest at this point, guys. Look, as you can see, we are looking towards the highs of what we've seen. So I am going to be looking to accumulate if we do have a massive correction in the whole market. The reason why I love Chainlink is so much is because a lot of the coins in the market, a lot of the projects in the market are very lone wolf. They look for the self. What Chainlink does is it gives the ability to all the various different coins in the market to link up through the use of smart contracts, etc. So it's a very exciting coin. It is almost the epicenter of the way in which cryptocurrencies will become rolled out amongst the world, or in essence talk to each other. So it's a very exciting coin. There is absolutely some other competitors that it does have, but right now this coin is looking very, very well set to move forward in a positive way, guys. So guys, I promise I will take a breath now. Okay, let's move on to the Bitcoin dominance. So I think this is something I wanted to speak about actually. So Bitcoin dominance, guys. Bitcoin dominance means how much of the market Bitcoin has over everyone else. So what we can see is, we can see that Bitcoin is currently dominating the market against all the altcoins in the market, all the other small caps, etc. The altcoins, 64.9% because of the price. It has the capitalization of the whole market, 64%. And what we can see is we've had this long term, as we can see with the price, guys, exactly, very, very simple, very, very similar to what we've seen with Bitcoin. We can see we've had this long-term wedge just here. And what we can see is if we will break out of here, guys, if we break out to the upside, what it will basically mean is it will mean that Bitcoin will go on a big rally. Okay? So Bitcoin will go on a big rally because therefore the Bitcoin dominance will be higher, bigger market cap, etc. And then from there, what we can see is if it does start moving to the downside, then perhaps we'll see an altcoin rally. But perhaps the altcoins will take the driver's seat. Let me just pull up. So apologies guys, I'm looking at the wrong chart just here. So I'm looking at the market capitalization. So again, if we break out of this, I'm getting completely moving away with myself just here guys, apologies. So let's move back to this. This is market capitalization. So what we can see right here is if we do break out of this and we do move up to the upside, we can perhaps all-time highs was at a $330 billion market cap. If we do move up past here and we do break out this wedge, then it will be again very similar to what is going to happen with Bitcoin's price once we break out, or what may happen, we will move up to them all-time highs perhaps. And then moving on to Bitcoin dominance again guys, what we can see just here is I'm not done any analysis on this, but I'll give my view, and in fact let's do a live analysis, see of how I like to look at it as a whole. So I'm going to create a little immediate, from what I can see looking at this chart, is we are trading within this wedge just here, this apex once again guys, and we're coming towards the end of this apex as a whole. I think the next couple of months it's going to be from now to June, and okay, so from now to July, what we can see is we are trading within this just here. So guys, what this means is if Bitcoin, if it breaks out to the upside, then basically what will happen is that Bitcoin will have further dominance in the market. So currently, as we see, we're at 66%. If we move up, that will mean Bitcoin has a parabolic run, in the fact that at one point, guys, we was down here in February 2017, we was up at 94%, guys, which is when we had the all-time highs, etc. Or the big, yeah, so the all-time highs, etc. around these areas, we had higher Bitcoin dominance along when the altcoins had their run also. So if we break to the downside just here, guys, this is interesting, because if we break to the downside of this apex, what that will mean is that the altcoins will have a rally, because Bitcoin will have less dominance on the market. Okay, so we're at 66% now. So if Bitcoin dropped to 60%, that may mean that altcoins will take up another 6%, a further 6% of the market capitalization off of Bitcoin. So that is only good for the altcoins. But I think as we move into the future, guys, we will either break out of this side, and it'll give us an indication. So if we break out of here, then I will know that it would be good to put some money into altcoins, because it's more than likely that altcoins will start to dominate a tiny bit more than what they have done in previous years, guys. Okay, let's move to the stock market. I'm going to give this I do realise we are at 22 minutes now, so I'm going to try and keep it as short and sweet as I possibly can. Let's move to Tilray. Okay, guys, so what we can see, guys, we've had this long-term ascending wedge, or ascending triangle, should I say. We've come out, ascending triangle is a bullish signal, so we've come back down to retest this line. We retested beautifully just there. We bounced straight back off it, we've come back up, and I've got various accumulation targets all the way down here. I don't have to speak much about Tilray. We are in a very similar position as we was before. We could be looking at something like a bullish pennant just here. If we look at this, what could be forming just here could well be something along the lines of a bullish pennant, guys. If it is, then we will break to the upside. But this is absolutely something I want to speak about for the next couple of minutes about the stock market, etc. Because what I think is going to happen. Moving on to BP, we can see we've had quite a failure to break above this level just here, but I think we have finally perhaps moved above and found a tiny bit of support. So it could be a small pump, perhaps up towards the 350 level, which is the next level, or the 340 level, which is the next level of resistance just there. So what we can see is we've abided by these rules. We did break back out of this line of support. We've come back up, respected it again, and what it looks like, guys, we could actually be trading within that again, that still, which we are. So again, guys, nothing really much to report on BP as a whole. So let's move on to BT, guys. We can see again very similar story as to what's happening with BP. We are still trading within a channel just here, respecting these levels of support again, and I do believe we are going to continue doing that up to probably the region of around the 120 to the 125 level, or 123 level, should I say, before we see any real signs of a reversal. Moving on to Vodafone as a whole, let's just move on. What I'm going to do is, I have mentioned in the past that I do think we are going to confirm this as an ascending wedge. We may still be trading within this. I'm going to just make this a bit longer. If we do unconfirm this, guys, then we will be looking at around the 140 level for 141 according to this level here, just here, for Vodafone as a whole, but I'm not convinced, as we are trading still within this ascending wedge, that we will break to the upside, I think we're going to confirm this and inevitably move down to this target right here, what I have mentioned in the past, guys. So I'm just going to move this up, so we are going to be respecting this prior level of support just here also. So I think we're going to move to the downside and test around the 120 level in the coming weeks, guys. Let's move on to Viva. Okay, guys, this is good. I've not looked at Viva today, but if we can remember absolutely beautifully, what we can see just here is if you would have entered just as I told you guys to put in this trade, which was just around this level just here, after this wick down, it looks like a hammer at the bottom, a hammer signal, which basically means there is a sign of a reversal in the market. We can see that we would now have fulfilled that 17% target, guys, which is something I'm quite happy about because it is live as it can get from the market breakdowns. We've been following it over the last few weeks, and the 17% return on that one, which is absolutely beautiful for the stock market, guys. It's a lot of percent in a short period of time. That would have been a, let's just have a look. So we have been following this from around here. So that was a 10-day return, guys. A 10-day return, absolutely beautiful, and confirmed 17% return. So there we are, guys. I didn't take that trade myself. I do actually have trades running elsewhere, but that was a nice little call that we can give ourselves a pat on the back for. Now, moving on, I'm at 26 minutes now. I realise it is getting a bit long, but let's move on to the DJI. And okay, guys, so here comes the economy and economics lesson. What I can see right now, guys, and it doesn't take a genius to understand what is going on in the world as we see and as we live. The world is going to absolute pot, guys. I think there's riots going on. Absolutely. It's like the purge in America. There's a lot of things happening in, again, America and England and France. And the Dow Jones, the S&P 500 continue to go up, guys. The economies continue to go up despite there is no income and there is more debt. So that says to me, guys, that says we are getting manipulated, we are getting propped up by the governments, by the government bonds, etc. I don't really care that much with regards to what is going on with them propping the market up. But what I do care about is the fact that what we can see right here is clear manipulation and propping up. So guys, if I look at this and get my target tool out, just again, if we do confirm this just here, guys, this ascending wedge, then we are going to be looking at a 22% decline, guys, which would take us 22% down to, let's just mark this out actually, so 22% would take us down to the 2100 level, guys. Now let's have a look at this. I'm going to put some moving averages on. I know I did mention in the last previous breakdown about the moving averages, and what I've done just here, guys, is what we can see is I've put the moving averages on. So we've got a 50 moving average here, so a combination of the past 50 candles and the 200 moving average also. So, okay. So what we can see, guys, we can see the last time we closed below this moving average just here was in April, around April time, and then before that it was in 2009. Now we made a quick recovery, perhaps through the propping up for the coronavirus and for various other factors that have come into place, and we've propped up and we found a bit of resistance at this moving average level just here. But guys, if we do go ahead and close below at this 22% mark, if we look at this ascending wedge just here, come back down and hit this target, then guys, the world is going to go to shit. I do apologise for my language, but the way in which this pans out, if we do close below this moving average, then we are going to be looking at these levels, and the bubble that we live in with regards to the economy will simply not be able to cope, guys, because once the Americans sneeze, we all get a cold. And I know I've got hay fever, but that's just me. But yeah, okay, so we're looking at the technicals right now. Anything could happen. We could see massive manipulation to keep the guys in check, to keep the banks in check, etc., which we are seeing. The excess tether printing in the cryptocurrency market. But what we can see is despite we've had a down day today, but despite the world that we live in, the S&P 500 continues to go up in price. Now that could looks like a tiny bit of a bearish flag. So if it's either a bearish wedge, an ascending wedge, or a bear pennant as a whole. So if that's a bear pennant, then we'll be looking at, again, a target down to around, I measured it out, another 20%, guys. So let's measure this out from a breakout, and okay, that would take us again below that moving average, just there, the 50 moving average, and I'll mark that out for over the next few weeks, guys. We'll have a look at that, and this is where I'm at. I think with regards to the world that we live in, the world economy goes in a very, not simple, but it works in short and long-term debt cycles. So the way in which every 7 to 10 years we experience a recession would be seen as a short-term debt cycle, guys. And basically what happens in a recession is we hit a peak where we cannot balance the amount of debt with the amount of income that is happening. So basically, for the economy to grow, the amount of debt that the government lend out for people to be able to go out and spend, which is another person's income, that grows into a big debt bubble as such. And what happens is, as this debt grows larger, people are not able to pay the debt back, which means the government, the banks are then at a deficit. And what happens then, guys, is we see the bubble burst, which is a recession. And what happens is that's every 7 to 10 years. And every 75 to 100 years, we see something called a long-term debt cycle, which the last time we had, which is basically a depression. The last time that we had a long-term debt cycle, guys, was in 1929, which was the Great Depression. So you do the math. We are looking at in and around, it could happen with the crisis of the virus and the way in which the world is getting propped up by seemingly what looks like a fart. We could be moving into a depression over the next 1 to 2 years, guys. And the long-term depression is, in essence, when the bubble gets so big that it becomes more of a crisis, and they then have to balance out the amount of income with the amount of debt that they've got, because currently the debt is heavy outweighing the income, because A, nobody's working, and B, we have the virus where they're shelling millions and billions and trillions of dollars, printing millions, putting the purchasing power down, and they are also making people are homeless, and people are not being able to work and bring income onto the table. So it is purely getting heavier is the scale for the debt as a whole, guys. Now, nothing again to end it on a depression, no, but I want people in the investment chef to be understanding and understand what is going on within the market and within the world, guys, because this is the stuff that they don't tell you in the media. They will tell you what they want you to hear. And ultimately, guys, this is why I think the stock market is getting temporarily propped up, and we are going to absolutely plummet at some point, in which case I will be looking to accumulate on the way down, guys, for when we start to, over the next couple of years, get back on our feet as a world and bring other new world to the table, guys. So I'm going to wrap it up here. It's been a longer one than normal, and my nose is getting very, very blocked now. But I will catch everyone in the next one, and I hope everyone has a brilliant weekend. I think this schedule is working for the moment. I cannot wait to get back onto the more frequency with regards to the market breakdowns. I know we was doing one every single day at one point, but I promise, guys, when this investment chef platform comes out, it is going to be crazy, guys. So I'll catch everyone in the next one. Peace.